In 2022, a home in Chelmer, a leafy riverside suburb just 8 kilometers from Brisbane CBD, had its insurance premium jump from roughly $2,000 a year to over $25,000. Same house, same street, just a different flood on the map. And here's the twist that every buyer and investor needs to hear right now. Despite that, property values in flood-prone Brisbane suburbs are still rising. The 2032 Olympics is driving billions of dollars into the city. Buyers are still lining up. And yet, according to a PropTrack and Climate Council report released in late 2025, flood risk has already wiped more than $19 billion from Queensland home values. So what exactly is happening along the Brisbane River floodplain, and how long can property growth hold up when insurance costs are pricing people out? Let's break it down. Before we get into it, if you follow Australian property, housing costs, or the insurance market, hit subscribe and turn on notifications. We cover this stuff every week with real numbers, not headlines. Takes 2 seconds, and it means you won't miss what's coming next in this market. All right. Back to Brisbane. Brisbane sits on a floodplain. That's not an opinion, it's geography. The Brisbane River winds through the city, and dozens of suburbs sit directly in its path when heavy rain hits. The city has seen 3 major flood events since 1974. The worst on record was in January 1974 during Cyclone Wanda, when around 8,000 homes were damaged. Then came January 2011, which inundated more than 20,000 homes and businesses across the city. And then February 2022, the one that changed the insurance market forever. Over 3 consecutive days, more than 200 millimetres of rain fell across southeast Queensland. The Brisbane River overflowed. According to the Insurance Council of Australia, over 300,000 flood-related claims were lodged nationally that year, totaling $7.4 billion in damage. In Brisbane alone, 23,400 properties were directly affected. Suburbs like Rockley, Oxley, Tennyson, Chelmer, Graceville, Indooroopilly and New Farm bore the worst of it. And the Brisbane City Council has an interactive tool, the Floodwise Property Report, that maps exactly which properties are in the firing line. It grades risk by annual exceedance probability. A 5% rating means there's a 1 in 20 chance of flooding in any given year. The highest risk zones sit in dark blue on that map, and a lot of riverside suburbs are coloured dark blue.
Here's where things got really serious after 2022. Before the floods, residents who were not even directly affected but lived near flood zones were paying between $4,000 and $6,000 a year for home insurance. After 2022, that figure went to $8,000 to $15,000 for those same properties. And in some cases, like the ones flagged by Ramsden lawyers in their post-2022 analysis, premiums went from around $2,000 to $25,000 annually. The Insurance Council of Australia confirmed that some homeowners in severe flood zones are now paying more than $20,000 a year just to keep their homes covered. And the trend is only going one way. According to the Australia Institute, home insurance costs in Brisbane have risen by more than 5 times the rate of general consumer price inflation over the past 35 years. That is not a small gap. That is structural. Nationally, the average home insurance premium rose 14% in 2023 alone, according to data analyzed by the Australia Institute. For high-risk properties in flood zones, the increase was 50% in the year to March 2023, according to the Actuaries Institute. By October 2025, Finity data showed the average Brisbane home insurance premium was sitting at $3,872 annually. That's the 3rd highest of any Australian capital city. But averages hide the reality for flood zone homeowners, where costs are 5 to 10 times that figure. Flood risk now accounts for more than 50% of home insurance premiums for properties in exposed areas of southeast Queensland, according to the Actuaries Institute. That is not a rounding error. That is the single biggest driver of what you pay. But that's just one part of the story, because while insurance costs are surging, something else is happening at the same time, and it's confusing investors and first-time buyers alike.
Property prices in Brisbane, including flood-affected suburbs, are still rising. Since Brisbane was confirmed as the 2032 Olympic host in 2021, the city's median house price climbed from around $650,000 to close to $1 million by 2025. As of February 2026, Cotality data shows Brisbane dwelling values were up 15.7% over the year, sitting at record highs. ANZ research, as of early 2026, is forecasting another 9.7% growth for Brisbane this year, and flood-zone suburbs are not immune to that tailwind. A block of units in Rockley, inundated in both 2011 and 2022, sold for $1.491 million in August 2025, according to Domain, shocking local buyers who expected those flood scars to bring the price down. PropTrack's senior economist Eleanor Krieg said some flood risk properties are not being discounted because buyers are willing to overlook risk for lifestyle, views, or simply because supply is too tight. But the research is increasingly clear that flood risk does suppress value over time. According to the PropTrack and Climate Council Property Value Flood Risk Report, released in October 2025, the Chelmer-Graceville area faces the biggest flood penalty of any suburb in the country, a more than 10.6% reduction in value, equating to around $300,000 per property. Those suburbs have been hit by 10 flood events since 2010. Properties with a flood history, according to Queensland government flood studies, typically sell for 10 to 15% less than comparable homes in safer locations. The question is whether the Olympic-era growth is masking that discount or whether buyers will feel it the moment the market cools.
Investors are watching this carefully right now, and there are genuinely two schools of thought. The bull case goes like this. Brisbane is population booming, housing supply is critically low with vacancy rates sitting around 1%, Olympic construction worth over $11 billion is reshaping the city, and relative affordability compared to Sydney and Melbourne is pulling buyers north. The infrastructure is real, the demand is real, and in that environment, even flood-zone suburbs get a whiff. The bear case, and this one is getting louder, goes like this. Properties in Category 1 or 2 flood zones face dramatically higher insurance premiums, reduced borrowing capacity since banks often cap loans at 80% of value for medium to high-risk areas, potential inability to get coverage at all, and discounted resale values. If you're paying $25,000 a year in insurance on a property with a median holding value of $1.3 million, the maths on rental yield gets very tight, very fast. According to the Australia Institute, approximately 70% of households exposed to the highest flood risk sit in areas where median income is below the national median. For those families, the insurance cost is not an inconvenience, it is a crisis.
As of mid-2026, the situation looks like this. Brisbane's broader property market is still growing, but the floodplain story is splitting into two separate markets. Safe zone properties where prices are surging with Olympic-era momentum, and flood zone properties where buyers are becoming more cautious. Insurance is becoming harder to afford, and some lenders are quietly tightening their criteria. The Australia Institute estimated in 2025 that approximately 1.4 million homes across Australia are either uninsured or underinsured, with flood-prone Queensland carrying a heavy share of that number. In a YouGov survey commissioned by the Climate Council, 54% of insured respondents said they were concerned that floods and severe storms could make home insurance unaffordable or unavailable in their area. 1 in 5 said they may consider going without cover if premiums keep rising. Going without cover is not an option for most mortgage holders. Lenders require it, which means for some flood zone homeowners, they are caught. They cannot afford the premium, but they cannot legally drop it while the mortgage is outstanding. Brisbane City Council does allow homeowners to apply for a technical review of their flood rating, which can potentially lower premiums if updated survey data supports a lower risk level. Raising floor levels and installing flood-resilient building features are also strategies agents in the area cite for maintaining property value and attracting buyers.
So here's where things stand. Brisbane is one of Australia's fastest-growing cities, with one of the most compelling investment stories heading into 2032, but running directly underneath that story is a floodplain, and the cost of ignoring it is now measurable in tens of thousands of dollars per year and hundreds of thousands of dollars in suppressed property value. The numbers don't lie. Insurance premiums in flood zones have gone up 5 times faster than inflation over 35 years. Flood risk has already wiped $19 billion from Queensland home values, and the 2022 floods produced $7.4 billion in claims, the worst year on record for insurers in Australia. The Olympic boom is real, but so's the river. And right now, homeowners, renters and investors along the Brisbane River floodplain are doing the same calculation, and the answer they get back is going to shape decisions for years to come.